Hey everybody, Mark Yegi here. Welcome back to the channel. We've got a huge week this week in the market. And let's start with the Fed. The Fed's having a meeting. They're going to come out with policy. Everybody in the street is expecting them not to lower rates. I have a feeling there's a small chance that they may lower rates, just a quarter of a point, just to kind of see what's going on. Everybody else thinks that, and they're probably right, but everybody else thinks the Fed is going to kind of just sit back and wait for more data to come in before they lower rates. I think they want to get ahead of it at some point. And it is an election year, so we'll see. That's going to affect the markets quite a bit. But we've also got some big companies reporting. Nucor Steel, we've got Microsoft, Google, Alphabet, Pfizer, General Motors, Starbucks, AMD, Qualcomm, Boeing, MasterCard, Exxon, Apple, Amazon, and Meta are going to be reporting this week as well. So I'm going to pick a few of those stocks, and I'm just going to analyze the charts for you so you can see what to look. The disclaimer here is that I don't like to do anything going into earnings weeks for companies. It's too risky. Things move way more than they need to move during the earnings week. So it's better to let those earnings weeks pass, and then you could react to those stocks.
Let's start with Microsoft. Microsoft is reporting on Monday. Microsoft's been an absolute tear. Certainly, if you can look at this chart, since March of 2019, it's just been going almost straight up. It's had a big cup and consolidation in there, but now it's in a breakout. And there's nothing wrong with Microsoft right now. Technically, it's looking really good. They're firing on all cylinders. They're making money. Their return on equity is good. Their earnings growth is good. Their sales growth is fine. They're involved in this AI thing, this open AI. And I'm not going to go into what they're expecting for numbers this week. I can just tell you that Microsoft is executing really well as a company. I'm going to leave Apple and Amazon for a few minutes from now. But let's look at Google, which is called Alphabet. I call it Google because that's what it is to me. It's at an all-time high, and Google is also in the middle of a breakout. Google is also doing some great things. They're involved in AI with their Bard product. They're their leader in search. They're the leader in, they own YouTube, and YouTube is just going crazy right now, the #2 search engine. And so they're at a breakout point. The breakout point for them was roughly 141. And so now the stock is at 153. So they're a bit extended outside of the buy zone, but you want to take a look at Alphabet, watch what they do during earnings and see what the volume and price action is. Okay, I'm going to do AMD, and then I'm going to do Facebook, Apple, and Amazon in just a second. So AMD, look at this thing. Gotten rid of all the sellers, and it's at an all-time high. And it's in that right sector, right? It's in the chip sector, which is doing unbelievably well. NVIDIA, SMCI, some of these companies that are kind of around that sector are doing extremely well. And AMD is no slouch, right? And Intel just did well too. And so now you're seeing AMD has been on a breakout really since about the 120s. And will it continue? I think this one has a little bit of risk for a pullback, but AMD is doing all the right things, so just keep an eye on that one as well. And Amazon, again, a good company, executing really well. They just haven't gotten back up to all-time highs, right? They were a bit choppy from 2021 all the way down through the bear market of 2022, and then they bottomed at around $80. It's doubled since the bottom, and the stock is now at 160. And Amazon is doing a lot of good things. They had a little bit of a hiccup in earnings, and that's one of the reasons the stock went down during that bear market. But Amazon is a company that, if you believe in as a utility, where people are, always going to buy stuff on Amazon, then you got to look at this Amazon. But just don't buy it during earnings, okay? Okay, let's go to Facebook, Meta, right? It's called Meta Platforms now. Again, all-time high. This stock is extended though, so they broke out from about a about a $326 level. And you can see the stock bottomed here around 90 bucks, and it's gone up to $400. So that would have been nice to be buying while, they were having a little bit of an earnings slowdown, but they're not doing anything wrong either, and they're coming up. I just think they're a little bit extended. This was the breakout point here at 326, and it's at 394. So be careful going into numbers with this one. And last but not least is Apple. You are seeing Apple at a really great spot on the chart, and we like to find that right spot on the chart. First of all, they got a huge return on equity. They got some debt, 159% of their company is debt, but they also have a lot of cash, so they probably financed some really cheap debt, back in the day. I think they're still doing a stock buyback. This has been consolidating you could see this long consolidation. It looks like a cup on here with a little flat base on the end of it. To me, it's all a big consolidation between about 200 and about, the low here of, let's call it 165. So there's a little consolidation going on in this, and it's above the 50 or right at the 50, coming into numbers. It just tested the 200-day moving average successfully, did it on okay volume, and now it's coming up to that $200 price. Now, one of I think the greatest traders of all time is Jesse Livermore, and Jesse Livermore really believes that round numbers have some psychological effect on the market. Apple is right near a round number. In fact, it bounced off that 199 level coming into the 200. I've been saying to the people in my mastermind group, look, if Apple hits 199 again, and it does it on any kind of volume, it's going to blow through 200, and I think the next stop is going to be 220. So that's about a 10% run, and that's just a minimum. Usually things run up, a minimum of 10%, more like 20 to 25. So we're looking at 240, 250 if this thing does what I think it'll do. And it needs the right market to help it, and right now we're in a green market. But it's going to need some help to get rid of some of the sellers that have been selling as it gets to 200. But once it gets rid of those sellers, this thing is going. So watch out for a big week. We got jobs numbers, the Fed, we got all those stocks that I just pointed out. Be careful. Don't be a hero trying to buy things going into numbers based on anything you hear on the internet or based on anything you see on TV, especially from somebody named Kramer. Usually you can do the opposite of Kramer and you might make some money, but he's an entertainer, and it's great to have awareness around what he's talking about, but just don't be buying anything based on some bald guy on the internet. Don't be buying anything based on anybody, a bald guy on TV. Just be careful. This is the time to be careful. It's earnings periods on these stocks, and these are some big ones that can affect the market either way. I think we are in overall a bull market. We've been in a bull market since January 9th of 2023, and it's now 2024, so it's been just a little bit more than a year. We are in a primary trend that is green, so a lot of the things are lining up right now that are green, and a lot of the stocks I just pointed out are on breakouts. So I hope that helps you kind of discern and analyze the market. Do some good research, and I'll see you on the next video. Take care.